live in the greater Atlanta metro area and you feel stuck at a low interest rate, but you want to move? In this video today, we're going to unpack how to do that in today's market. Let's get into it. Before we get into it, you got to know a few different stats that we've been digging around. Here's a survey from Point that dictates homeowners, 51% want to move, but they feel stuck. Only 14% of those people thought that they could make it happen in their time frame, and 17% either wanted to tap into the equity they have in the house, or their house is too expensive and they're ready to downsize. If you've just found us, I am a local real estate professional that is licensed in the state of Georgia. I am a part of a local realtor board in the Atlanta metro area. And one thing that I love to do is educating homeowners on the options that they have, because there is more than one option. Then moving into that, you're probably thinking, I'm stuck, oh no, what to do? You don't have to feel that. We're gonna unpack why you feel that way, and we're gonna look at the positive. How can we get it done? So in this video, we're referencing the Fox 5 Atlanta article talking about the survey in home affordability. Eddie Lim, co-founder of Point and CEO, stated there's an affordability spiral of people that want to get out, but they simply don't think they can afford it. So it's been my experience over the past 6 to 7 months in this current market, that is 100% true. Eddie's not wrong in that, but we need to unpack what are the options that we have for the current homeowners that are looking to sell. Summer buying season is over and homeowners are a little bit frantic. Interest rates are as high as they have been in the last 7 years, and there's not really that many homes to choose from, citing an inventory loss. So that's actually making it really tough for the market these days because sellers just don't want to sell. Is there hope in market changes moving forward? Nah, probably not. So back to the Point survey, 89% said if interest rates drop below 6%, 89% of those people, they would be willing to skedaddle, sell their house, and open up some more inventory for you. Chief economist Doug Duncan says this: unfortunately, rates are probably going to stay the same for the next little bit. According to Fannie Mae, rates are likely going to stay between 6 and 7%. Why the Fed maintains its interest rate hikes. So now that we unpacked the reality and it has settled into what's happening in the real estate market, in the economy, let's give us 3 big strategies that we can do to get you unstuck. First strategy that we have on our list is the 1% down on conventional loans, and let's unpack what that is exactly. So the mortgage company is actually going to buy that other 2%, and they're going to pay your PMI fees, private mortgage insurance. And I would suggest getting with a local lender that knows the market, that's going to walk you through it, because there are some discrepancies in that. It's not as cut and dry, and not everybody qualifies. I'm going to link a description below our preferred lender in the local Atlanta market. Let's go. Another strategy is this. There is this thing called an assumable loan, and products like FHA, VA, and USDA are all assumable loan packages. If you have a conventional loan, the way to find out if it is actually an assumable loan is to go back to the contract that you signed when you got the mortgage, and it has to have an assumption clause in it. If it doesn't, I'm sorry, your loan is not assumable. So let's unpack assumable loan and what that looks like. So if you've got a buyer that wants to buy a home from the seller, and the seller has an FHA loan, what the buyer has to do is they have to call and apply to the seller's mortgage broker, whoever's servicing that loan. Once they have been approved through that company, they then can assume that loan. Now, contractually, there has to be some special verbiage in there, and then you have to figure out, well, now what are you going to do with the rest of the equity of the house? Okay, if the house is $500,000 and the seller owes $250,000 and you assume a $250,000 loan, where is that other $250,000 going to come from? You have some options there, and I would suggest talking to that local preferred lender. Let's talk 3-2-1 buy downs. That is the other strategy that you can use in the current market. Well, let's unpack what that actually is. So if the current market rate is 7%, 3 is the first year, it will be 3% lower for the first year of that mortgage. And the second year, it will be 2% lower than the active interest rate. And the last and final year will be 1% lower than the active interest rate. And then you can finance at any time during that process if it drops below those interest rates, and you won't get dinged for it. So this strategy is going to air to the person that wants to buy in today's market, knowing if they're partnering with the local real estate agent, looking forward into the future, they know that those interest rates are going to drastically drop. It's going to put you in a great position. So that was a lot of information, and it is my hope that it gives you hope, that you feel confident in your home buying journey and selling journey in the current market. And we actually went to this video over here on what are buyers and sellers asking, and we answered all those questions. Again, my name is Greg Goode, Northwest Atlanta's favorite realtor. Have a great day. Peace.